Hi everyone, I'm Jason with Level Up Investing, and in this Action Friday video, I like to talk about a specific investment that I've made. And in this video, it's going to be Berkshire Hathaway, specifically Berkshire Hathaway.B stock. So for those of you not familiar with Berkshire Hathaway, it is a company that has a value of approximately $450 billion, and it has a combination of wholly owned companies you see here on the left, as well as companies in which it has significant stakes in. Now this picture here, this diagram is a little outdated. As you can see, it still has some of the old companies that Berkshire Hathaway does not have stakes in currently, like the airline companies. But nonetheless, this is more for you to get the gist of how diversified the company is. What's interesting on the bottom left here, this Berkshire Hathaway Energy, that's one of the major companies along with Occidental Petroleum. And that's the topic of today's video, is that Berkshire Hathaway recently added significantly to its energy business, energy portfolio. And this is why I went ahead and purchased some more Berkshire Hathaway-B stock recently. So in a previous video, which I'm showing this thumbnail here, I went ahead and talked about the details of Berkshire Hathaway. I went over the financial statements, some of the history of the company, and I went over my own investing strategy. And if you haven't seen that video, I'll go ahead and put the link of that video up here in the corner, the top right corner, so you can check that out to get a little bit more background. But basically, at the end of the video, I came up with my intrinsic value calculation. I determined that the company is definitely selling at a discount at this time, and that I was waiting at that time for Berkshire Hathaway to make a move with its $137 billion of cash sitting around. That what kind of move was it going to make? What kind of company was it going to purchase or get a significant stake in it? So I've been waiting for that, like most other people, and that day has come. So let's go ahead and talk about this recent purchase. So very recently, Berkshire Hathaway just purchased the natural gas assets of this company known as Dominion Energy. So it was purchased at an enterprise value of $9.7 billion, which broke down to $4 billion in cash, and then $5.7 billion in debt assumed. And what Berkshire Hathaway got for that was 7,700 miles of natural gas transmission, as well as 900 billion cubic feet of gas storage. Now, I don't know about you, but I can't even imagine 900 billion cubic feet. But nonetheless, that was a big part of the purchase. So with this purchase of the natural gas component, and by the way, Dominion Energy went ahead and has let everyone know that the reason why they sold it was so that they can focus on renewable energy. But with this purchase, Berkshire Hathaway has increased its portfolio in the energy sector. Previous investments have been in Occidental Petroleum, as well as Berkshire Hathaway Energy. And so the recent acquisition of the natural gas component of Dominion Energy, it adds to the total asset class here, giving it a total value of this energy sector asset class of approximately $75 billion. $75 billion energy investment, which is now approximately about 16 to 17% of the entire Berkshire Hathaway company. So a very significant move that Berkshire Hathaway has made. So here's just a couple articles that I found. This first one was in Seeking Alpha. It was Berkshire Hathaway purchases Dominion Energy assets, building an energy business. And it goes on to describe the purchase of approximately $10 billion worth. And this article also states Warren Buffett bets $9.7 billion on a long future for natural gas. And in this article, it talked a lot about how many companies as well as in the current political climate, a lot of politicians are really moving towards and pushing for more renewable energy sources. So this article talks about how this move is quite contrarian to that, and the idea that Warren Buffett has still invested in this because the feeling is that although the move towards renewable energy is definitely happening, that it's going to take quite a bit of time to get there, to get to the goals that have been set, and because of that, people are still going to be needing some form of energy, something readily available to power their appliances and everything else. So he's long on the future for natural gas, and I think also there's a component of it with the pandemic and with the idea that people are moving away from big cities. That perhaps he's thinking that there's going to be a higher need for multiple types of energy sources, natural gas, propane, as opposed to just gasoline. So I think I'm assuming that's part of the play, and why their company has invested in this natural gas sector. And this article from Inc. Says Warren Buffett is finally spending some of Berkshire Hathaway's $137 billion, and it's classic Buffett. The Oracle of Omaha followed all his investing rules on this deal. So in this article, it talks about his basic rules of buy what you know, or buy what's in your circle of competence, that he calls it. And he certainly knows about the energy sector because of the other companies they've invested in. Buy what you know, but also make sure you buy a wonderful company at a wonderful price, or in other words, buy a company when it's undervalued for whatever reason. And it looks like that's what he's done here with this purchase. So let's go into some of the numbers as to maybe some of the reasoning behind why this purchase was done. Okay, so I took a look at the 10K for Dominion Energy, and this is the 10K ending December 31st, 2019. So you can see how the company is split up between Dominion Energy, Virginia Electric and Power Company, and Dominion Energy Gas Holdings. So if we scroll down on this 10K, the annual SEC filing, let's go look at the financial statements. And then specifically for the gas holdings, because this was a natural gas play, looking at the consolidated statement of incomes. 2019, what I'm seeing here under the net income attributable to Dominion Energy Gas of $721 million in 2019. So reason why I'm looking at this is I'm trying to kind of piece together why I think Berkshire Hathaway went ahead and made this purchase. And the best thing that I can come up with, and this is going to be a very rough idea, of course. If I go ahead and I'll calculate this off on a different screen here. If I take the net income of $721 million, and then that's the net income, and divide that by the capital invested of $4 billion. Again, remember, it's $4 billion capital, and then assumption of $5.7 billion in debt. So divide the net income by the capital outlay, and that comes out to 18%. So again, 721 divided by 721 million divided by 4 billion comes out to 18%. So that is, of course, a very rough estimate of the anticipated yield, or rather a return on the invested capital, return on the equity. And I think that's probably what made buying this portion of Dominion Energy attractive for Berkshire Hathaway. Okay, then of course, taking on that $5.7 billion in debt, of course I have to think, okay, I got to make sure before I invest in Berkshire Hathaway further, I want to make sure that the company can can shoulder that type of debt. Well, this is, as we all know, Berkshire Hathaway has such a excellent balance sheet that this is more of a kind of an exercise, really, more than anything else. So I like to look at the amount of leverage of the company, and specifically here I'll look at the debt to equity ratio, and I can see again, this is Berkshire Hathaway B, debt to equity ratio in 2019 of 0.24 and trailing 12 months of 0.28, and we can actually see year over year from 2016 on that the leverage amount has actually decreased steadily. So excellent balance sheet, as you would all expect with Warren Buffett. And this is just, I like to just look at the numbers just to kind of prove to myself what I already know, basically. But nonetheless, here it is in black and white that the debt to equity ratio is very, very good. So there's really no question that the company, over $400 billion company, that they can shoulder a $5.7 billion debt from this new acquisition. So you pull that all together, and that, to me, that was really my indication that, okay, this is going to be this is a good investment. This is going to do very well with a potentially 18% yield that I just calculated. Again, a rough calculation, but I can see why he went ahead and purchased the natural gas component. The other thing to think about when it comes to the company's competitive advantage, when you think this was 7,700 miles of the natural gas transmission. So when you talk about a competitive advantage, in this case, you talk about this significant asset that was created along with the 900 billion cubic feet of gas storage. That's the kind of thing that some other guy would have a really hard time to come in and try to replicate, to try to copy. So that's classic Warren Buffett, looking at utilities, looking at things that have been laid out a long time ago, and are gonna yield results for a long time. And again, he's very optimistic that people are going to utilize natural gas products and natural gas energy for a long time. So that's why I think he went ahead and purchased this. So because of that, I've always been a fan of Berkshire Hathaway, and like I said in the last video, I was going to wait to see if he went ahead and bought another company. So based on that, I went ahead and picked up some more shares of Berkshire Hathaway this week, and since then the share price has gone up about 5% from my cost basis over the last few days. And so now I'm going to keep watching, and I'm probably going to purchase more, because to me this is basically Berkshire Hathaway opening up the valve, so to speak, open up the valve for the fire hose of capital that they have. And I think they're going to go ahead and be purchasing more over the next few months. So this was a very encouraging step, and knowing that this is a company that this is the first major purchase that they made in about 4 years or so, 4 or 5 years. So that was my action for this week, and I hope you liked this video, like the content. If you do, definitely give me a like on the video, and hit subscribe and the notification bell so you get more videos like this. Remember, I do educational videos on Tuesdays, and I do more of action-oriented videos on Fridays. So I hope to see you on the next video.